When should you sell your Bitcoin? In this video, I want to go into how I think that long term holders of Bitcoin, the people who have studied the asset, the ones who don't plan to trade in and out, the ones who aren't gambling on this asset, how they can use Bitcoin to build long term wealth that they can rely on to pay for their expenses, to help maintain their lifestyle in the long term, let's say 10, 20, 30 years from now. Now, keep in mind that if you have enough Bitcoin and you're older, you don't have 10, 15, 20 years to retirement. Let's say you plan to retire in a few years. This also applies to you if you have enough Bitcoin. If you're thinking that I'm going to tell you some ideas on how to time the market, this is not that kind of video. If that's what you want to do, just click off now. There's no point of you wasting your time watching this video if that's what you expect. In this video, I want to talk to people who truly want to build wealth, who truly believe in Bitcoin's future, and who understand that Bitcoin is a hedge against the US dollar eventually going to zero. You've definitely seen this graphic before. What it does is it shows you how much value the US dollar has lost over the long term. So, what you see here is that the amount of purchasing power that the US dollar has is constantly decreasing, and it'll continue to decrease forever. The US dollar is not meant to be a store of value. There are people out there who are not completely financially literate. They don't quite understand that the US dollar is designed to lose value over time, and they hold on to it. And that's probably the worst decision that you can make. One thing that I've noticed is that a lot of people who don't quite understand that the US dollar, Canadian dollar, fiat currencies are designed to lose value, one thing that they don't understand is that you never go from US dollars to assets and then back to US dollars. You don't sell your assets, you hold them for as long as you can. If you're planning to trade, let's say you think that the 4 year cycle is going to work out exactly the same as it did in the past, it'll continue to work out in the future. If that's what you think, then I don't quite think that you understand what you're trading here. Bitcoin isn't just another asset. Bitcoin is another form of money. Bitcoin directly competes with the US dollar. The US dollar is used as money, it's used as a medium of exchange, unit of account, and for a lot of people, is used as a store of value as well. So, Bitcoin is an alternative to the US dollar as money. We haven't seen anything like this in the past. There's never been an alternative that could potentially work. Gold does not work as money. You can tokenize gold. But that's basically what the US dollar was up until 1971, when the US government said you can't trade your US dollars for gold anymore. And they stopped every country who had their gold deposits with the US and they held US dollars. They stopped all of them from getting that gold back. I want to play this quick video for you just so you know what exactly happened in the past. This is from 1971. Listen to what Richard Nixon says in this video.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States. In full cooperation with the International Monetary Fund and those who trade with us, we will press for the necessary reforms to set up an urgently needed new international monetary system. Stability and equal treatment is in everybody's best interest. I am determined that the American dollar must never again be a hostage in the hands of international speculators.
This is from 55 years ago. He said in the beginning, we temporarily are suspending the convertibility of the US dollar into gold. And that temporary measure is still applicable to this day. Now, keep in mind that the US government basically got everybody to give them their gold. That's what the Bretton Woods Agreement was. It was established in 1944, where the US dollar was pegged to gold at $35 per ounce. You can see here this system designed for economic stability also founded the International Monetary Fund and the World Bank, but ultimately collapsed in the 1970s due to dollar overvaluation and rising deficits. Basically, what happened here was that the US government printed way too many dollars compared to the amount of gold that they had. So when countries wanted to come back and give them the dollars that they had printed, the US didn't have enough gold to pay them back at $35 per ounce. So they had two solutions here. Number one, they could just completely get rid of the agreement and That's pretty much what they did. Or number two, they could have said that we're going to increase the price of gold per ounce. We're going to increase it from, let's say, $35 an ounce to $70 an ounce to $100 an ounce to $200 an ounce. And other countries would have freaked out. This would have completely removed all trust in the current financial system, and it would have probably collapsed. We wouldn't have the US dollar the way it is today. And what Richard Nixon did was he did the exact opposite. He basically pulled the rug on everybody. He said, you're not getting your gold back. There's nothing you can do about it. The gold is ours. We're going to keep it. You keep the dollars that we gave you. And the reason why this relates to Bitcoin and how you're going to fund your lifestyle with Bitcoin is that after this agreement broke down, the US dollar basically became monopoly money. It continues to lose value. It will continue to lose value forever. And you can see that in the price of gold. This shows you the long term price of gold. If we zoom in, we can see that at one point, gold's price was, in fact, $35 per ounce. And that was the case for a very long time up until around, you can see here, 1968. In 1968, the price of gold went up to 37.86 per ounce. Then it went up to 43.25 per ounce. The US government basically shot down this market mechanism that would have discovered that the Federal Reserve printed way too many dollars and there isn't enough gold in existence to match the number of dollars that exist. So you can see here 1961, the price of gold was at 34.81. In the couple of years before that, it had gone up. But after that, you can see here the price of gold started going up. That video was filmed in August of 1971. And you can see here, if we zoom in, I'll show you. If we zoom in, the price of gold actually went down after that video was made. You can see here in August, the price of gold went all the way up to $44 an ounce. It opened the month at 42.65 an ounce, but it closed the month in the red. It closed the month at $40.94 per ounce. I think this is a really great example of how irrational markets are. You can see here the price of gold went down after the US government said that the US dollar is no longer going to be traded for gold. I think that this should have shocked markets. It should have made people want to own as much gold as possible and to get rid of their dollars because they would have realized that the US dollar is backed by nothing. But you can see here that short term reaction doesn't really mean anything because over the long term, the price of gold only went up and then it kept going up. If we zoom back out, you can see here the price of gold never went back to $35 an ounce again. In fact, it just kept going up and it kept going up. And you can see here, if you had bought gold back here, the movements today are 3 times the price that you paid. But you can see here, gold went down $90.80 per ounce. You can see that right here, $90.80 per ounce today. And so today, the price moved by 3 times what you would have paid back then for an ounce of gold. The price of gold now is $4,800 when back then it was only $35 an ounce. The main takeaway here should be that the price of gold in terms of US dollars will rise forever because the US dollar can be printed out of thin air and it takes time, energy, and effort to produce more gold. Now let's go back to Bitcoin. What do we know about this asset? We know that Bitcoin is digital. It can be used as a medium of exchange, a unit of account, and a store of value, whereas gold can't really be used as a medium of exchange because if you wanted to pay somebody, let's say on the internet, you really can't. How are you going to send somebody gold over the internet? You can't. It's impossible. People suggest that maybe we create another token that's backed by gold, but that's just going right back to the US dollar, which was backed by gold in the past. I think that Bitcoin is a much bigger threat for the US dollar, for gold, for the real estate market, for the bond market, for all these assets than most people think because it can be used as a medium of exchange, a unit of account, and a store of value. This graphic is really outdated. I can't find a more recent one. I don't think that Jesse has come out with a more recent version of this, but you can see here, all of these different assets are only being used as assets because we need a way to save. The wealthy, the people who are producing a lot of value, more value than they consume, don't want to hold on to dollars. They understand that the dollar can be created out of thin air. So what they do is they buy other assets, for example, real estate or stocks. They buy them because they want to preserve the purchasing power of their money. And what exactly do these wealthy people do? Do they ever sell their assets? No, they hold on to them for as long as they can. They hold on to them and they pass them down to their kids, their grandkids, their great grandkids, until, let's say, at some point, somebody who's not financially literate sells the assets. One of the reasons why they do that is because if we go back to the gold price here, they know that the US dollar is worthless. They know that the price of assets will continue to rise forever. What you see on this chart is the price of the S&P 500 from 1871 to 1929. You can see here, it didn't really move too much until at one point it just started skyrocketing. This is the end of the roaring 20s. The price of the S&P 500 went up significantly. You can see here it went from $8.19 per share to $32 per share. Do you think that the people who sold all the way down from $32 to $4.91 expected that the S&P 500 would eventually go to $100? You can see here, $107 in 1968. If we keep going, and this is the crazy part here, after 1971, when the dollar was basically made a fiat currency, you can see here over time, the S&P 500 accelerated in its growth. So the growth actually sped up. It started happening even faster because at this point, the wealthy figured out the US dollar can be created out of nothing. They understood that because the US dollar is essentially worthless, fiat currencies in general are essentially worthless. They understood that they should own assets for as long as they possibly can and not sell them. You can see here, it keeps going up. It never stops going up. It just keeps going up. It'll continue to go up forever. You're going to see at some point that the S&P 500 is worth $10,000 today. It's worth $6,976. You can see that here. Eventually, it'll be worth 10,000. Then it'll be worth 20,000. Then it'll be worth 50,000. Then it'll be worth 100,000. It'll keep rising because the US dollar is worthless. Now, it's possible that it goes to zero because of many reasons. Let's say the US government starts punishing people who own these companies. They start charging them an unrealized capital gains tax and everybody starts dumping their stock, and that could be a massive problem for the S&P 500. I'm not betting on that though, because the people who set up those regulations are the ones who are the wealthy. They don't create regulations against themselves. So what people do is they buy the S&P 500, they take on margin loans against it, and then they never sell, because if you sell, you have to pay taxes. If you sell, the government takes a cut of everything that you earned, even though it was a result of inflation. So over time, the wealthy keep buying, they keep accumulating, and they never sell because they don't want to pay taxes, and they just borrow against the assets that they own. The exact same thing applies to real estate. The price of real estate always goes up. It'll continue to go up. Although I think that Bitcoin's price will go up faster. I'm not saying that these assets won't go up. I'm saying that Bitcoin's price will go up much, much faster than them. And that's how Bitcoin absorbs the value from real estate. It absorbs the value from bonds. It absorbs the value from equities. The numbers that represent these assets don't really mean anything because they're in terms of a fake form of money. Over time, the 370 trillion in real estate will keep rising because the number of dollars that can chase real estate will continue to rise forever. I think the only one that could really fail here is possibly bonds, because bonds fulfill short-term cash flow needs for people, let's say, who are retiring or who are retired. Bonds pay you a monthly cash flow. You get to pay for your expenses with that cash flow. But over time, the value of bonds only goes down because the interest rate that you receive on your bonds is going to be lower than the inflation rate. So the dollar is being created faster than whatever interest you're getting on your bonds. So I think that bonds could actually go to zero because Bitcoin is so powerful as an asset. I think we're going to see a lot of Bitcoin backed credit, like what MicroStrategy is doing with STRC, STRD, STRF, and STRK. You're going to see a lot of companies that issue credit, they issue digital credit that's backed by Bitcoin. So people are willing to lend them money because the Bitcoin is what guarantees a payment in the future. And again, this is something you have to connect the dots on. These companies aren't selling their Bitcoin to pay back the debt that they borrow. They're keeping the debt forever. They plan to keep paying the interest on the debt because they know that whatever they have to pay on the debt is going to be devalued in terms of Bitcoin. And the Bitcoin that they buy today is going to grow much, much faster than whatever interest rate they're going to pay on that debt. So in the case of STRC, Strategy actually pays an 11.25% dividend per year, and all of the proceeds from STRC go directly into Bitcoin. So again, these companies aren't selling their Bitcoin. They're going to hold onto their Bitcoin for as long as they can, the ones that are managed properly, and they're going to issue credit against the Bitcoin that they own. So now how do you use your Bitcoin and when do you sell your Bitcoin? You don't. You keep your Bitcoin as long as you can. You follow the playbook that the wealthy have followed for decades, for centuries. They don't sell their assets, they hold on to them as long as they possibly can. So now how do you, the average person, take advantage of this strategy? You're not able to issue your own Bitcoin backed credit, but what you can do is you can find lenders who are willing to lend you fiat currencies against your Bitcoin. This way, if you don't get liquidated, if you keep yourself under leveraged, you make sure you don't over leverage, you never have to pay taxes on the Bitcoin and you never have to pay taxes on the proceeds that you get from this loan that you take against your Bitcoin. If we zoom in on Bitcoin's chart and we only look at the last few months, we can see here in terms of US dollars, it's down massively. It went up to 126K and then it came all the way down to $74,499 in the last 4 months. And if we zoom out a little bit more, we can see it did exactly the same thing since November 10th, 2024 until April 10th, 2025. It went up and it came down. It did this twice, went up and it came down again. Bitcoin is extremely volatile. We all know that. We understand that. But this isn't a reason for you to sell. If we zoom out on this chart, we can see that the price only goes up, but you only get rewarded for holding over the long term. If you keep buying and selling, eventually you're going to make a mistake and you're going to end up with less Bitcoin than you could have if you just buy, create value, buy, create value, and you keep doing that as long as you possibly can. Your goal should be to master your craft, get really good at whatever you do, and get paid a lot for doing it, not trade Bitcoin. Trading Bitcoin is a full time job in and of itself. I think Bitcoin does a really, really great job of testing your conviction. You can see here the price goes up and then it comes down. It keeps doing this over and over again. You can see here at one point it went from about $5 all the way up to about $16, and then it crashed again all the way back down to 7. And then after that, it never went back down to $7 again. This is going to happen to every single price. Every single price of Bitcoin is eventually going to be a rounding error. You can see here, it did the exact same thing again. It went from $7 all the way up to $258. Here, people were probably buying out of euphoria. They were thinking this thing's going to go up forever. And then within a couple of months, came back down to $47. This is a true test of your conviction. If you don't quite understand what Bitcoin is, the volatility is going to scare you out. But again, that price, $51 at the low here, was never reached again. Once the sellers at $51 ran out, no more Bitcoin was available at that price, and the price started going back up. And you can see here, it went all the way to $1,161. Again, imagine you were able to buy Bitcoin for $1,161 today. How happy would you be? A lot of the people back here probably weren't very happy to see that they paid $1,161 for that Bitcoin, because over time you can see it didn't come back to that price until April of 2017. So the people who bought here, November 2013, were basically stuck holding their Bitcoin for 4 years. But eventually, again, that price never got reached again. You can see here, 1,171, it dropped, then it came back up. And if we zoom out even more, we can see every single one of those cycles becomes basically irrelevant. You can't even see it if you zoom out enough. And again, the same thing happened in 2017. Bitcoin's price ran all the way up to $19,800, and then it came back down to 3,500, went back up to 13,600, came back down again to 3,900, and then it passed that 2017 price of $19,000 in 2020, went all the way up to $69,000, and then it came back down to 15,000. But I think that we're never going to see this $20,000 price, this $15,000 price ever again. In the moment, it feels very painful to see your Bitcoin position go up and then come down, go up and then come down. It's very painful, and I completely agree, but I think it's worth it. Statistics show that 10 days of the year are where Bitcoin gets most of its returns. And if you didn't hold for those 10 days, then you probably don't make money at all. You don't know when those 10 days will be. You don't know when Bitcoin's price will suddenly start reversing and shooting back up. You can see here, the increases in price are very sharp. The increases in price go from, let's say, 30,600 in July of 2021, all the way to about 70,000 in November of 2021. And of course, the price dropped after that, and that's perfectly fine. But who would have predicted that Bitcoin would go from 70,000 all the way down to 15,000? Most people who succeeded throughout this period and who actually held their Bitcoin were the ones who kept buying, and they kept buying over time no matter what. They forgot about it. It was just happening in the background. They didn't sell their Bitcoin, they just held. They held because they knew that eventually the price will come back up. They understood what they owned. So when do you sell your Bitcoin? I think you never sell your Bitcoin. I think you hold as long as you can, and then you use your Bitcoin as a foundation for your finances in the future. You hold on to it for as long as you can because you want compounding to work to your advantage. Eventually, Bitcoin's current price will be a rounding error. You're going to see that it moves $78,000 every year, then it moves that much in a month, then it moves that much in a week, then it moves that much in a day, then it moves that much in an hour. Every price will eventually be a rounding error because more and more dollars can be printed. There are infinite dollars that can go into Bitcoin, and Bitcoin's price can go up forever. So if you're not a gambler and you truly understand what Bitcoin is, you never sell your Bitcoin. You hold on to it for as long as you can. And then eventually, whenever you do want to pay for your lifestyle, you borrow against it. Or if you have to, you sell small chunks to pay for your lifestyle. But again, that's not what the wealthy do. The wealthy hold on to their assets as long as they can. They never sell their assets. They keep their assets for generations. Your goal should be to do what the wealthy have already done to be successful. I think that Bitcoin works perfectly as collateral while fiat currencies exist. I don't know if fiat currencies are going to fail. 95% of the people out there still want to use fiat currencies, and they'll continue to use fiat currencies forever, no matter how badly they get screwed over, because they don't understand how they're getting screwed over. So if fiat currencies continue to exist, Bitcoin will probably be the top tier asset that can be used as collateral because it can be used globally. You can borrow against your Bitcoin from a lender in any country because you can just send them the Bitcoin digitally. They'll send you fiat in return. So, no, you never sell your Bitcoin. You hold on to it as long as you can. You hold on to it forever, potentially. You hold on to it even after you die. You pass it on to your kids, your grandkids, your great grandkids. You pass it on to someone who can make better use of it by borrowing against it, because that's what creates generational wealth. If you sell your Bitcoin, eventually you're going to run out of it. Of course, it's going to move to other people, but a lot of that Bitcoin is going to be bought by corporations like MicroStrategy, like BlackRock. They're accumulating as much as they can. I think you hold on to your Bitcoin as long as you can. You never sell it. You go through the volatility. That's what I'm personally doing. You can do whatever you want to. That's my suggestion. You go through the volatility because you can't time where the market is going. Your goal should simply be to stack as many Satoshis as you possibly can. And at some point, those Satoshis can be used as collateral. I made a video explaining the buy, borrow, die strategy. You can watch that here. It explains to you how you buy Bitcoin, you borrow fiat against it, and then you die with the loans. You never pay taxes and you never sell your Bitcoin.